I don't know how many of you guys have ever heard of this. You can let me know in the comments below, but I recently have only heard about this, and I did some digging to find out what this was all about. And there is a website with the URL called WTF Happened in 1971, and you can imagine what the WTF stands for. And the reason I want to bring this up for today's video is because that website does a fantastic job of showing how many things have changed and just how drastically since 1971. And if you don't know what this is about, then a lot of you are probably asking, well, what's the big deal, Michael? What happened in 1971? Well, that was a pretty pivotal year for the United States, because that year, President Nixon took the dollar off the gold standard. And prior to 1971, all of our US dollars in circulation were backed up by gold. So you could still redeem your money for gold and silver, essentially. But after the dollar was taken off the gold standard, it changed everything, guys. And I'm only going to go into a few points in this video. You can go look at the website for yourself to see just how many things changed. But it is astonishing how many things changed in just the past, basically, 50 years since this happened. So the first thing that really happened after this is what this essentially did is it made the dollar tied to nothing, just like it is right now. So that's one of the reasons that the United States can print as many dollars as they please without anything backing it up. And this is why you see the value of our dollar getting destroyed over the years and inflation running so high. It's because they have printed too much money. But prior to 1971, that wouldn't have been possible. They would only be able to print the amount of dollars that coincide with the amount of gold that the US is holding at any given moment. And just to put this into perspective, guys, the US national debt back then was only about $1 trillion. Fast forward 50 years to today, that number is now up to $91 trillion. That just goes to show you how insane it is, how much debt was created ever since 1971. And this brings us to the biggest problem that we're having right now worldwide, because it's not just the United States who's in trouble with debt. It's every single country that doesn't have their currency backed by gold, which is everyone. Because also, in case you don't know, the US dollar is the reserve currency of the world. So a lot of the most major goods get traded in US dollars, and I know that that's starting to change for some big things like oil, and we're not going to get into that in this video. But I just wanted to mention that real quick so you guys know that I'm aware of that. So the reason why this is important is because what we're seeing right now, and why you see the stock market starting to crash and home values starting to crash and everything that was worth a lot of money just a few months ago starting to drop in value, is because what's happening right now is a liquidity crisis. Debt and credit and lending were cheap for the last 50 years, essentially. And that's what taking the dollar off the gold standard did. Well, the day of reckoning has finally come, so much so that now we're all going to be paying for these last 50 years of cheap lending, essentially, because the lending has gotten so far out of control that wages have not been able to keep up with the amount of inflation that all this money printing has done. So not only are we seeing higher interest rates for things like auto loans and mortgages, but on top of having those higher rates, it's also much harder to qualify now because of a lot of things. Any lender who's looking to give you any amount of money right now is going to be much more discerning than before, when credit was freely available, because now they don't have a way to just pass the buck so easily to, like, say, the Fed, who buys all the mortgage-backed securities. That's an example for the mortgage lending. Look at this, guys. Halloween. So anyone who's looking at their stock market portfolio or your home equity and you notice it dropping and you're not sure why, this is why, guys, because the liquidity crisis has arrived and it's here to stay for the time being until this whole mess can get sorted out. Because it's basically impossible at this point to keep creating more and more debt, to keep inflating the debt bubble without the whole thing completely bursting. And I think it's already too late. I think we're at the point of it bursting right now. And that's why you're starting to see interest rates climb so high, because it's a huge deterrent. It's trying to push people away from borrowing right now. And if you are going to borrow, you're going to pay dearly for it. That's essentially where you're at with it. Right now is like one of the worst times to take out a loan since the 1980s, essentially. And another reason I wanted to bring this up is because it brings me back to a little bit of my childhood and all the advice you hear from your relatives and stuff growing up, and you just hear people say things. And one of the ones we talked about in an earlier video was, a horrible false narrative that if you carry a balance on your credit card, it somehow makes your credit better, which is totally false, by the way, guys. We covered that already. But anybody who still thinks that, that's not true. Pay off your credit card each month, get the points, don't pay any interest. All you're doing then is making the credit card companies rich. Okay. But there is one piece of advice that I actually think still holds up till today, and maybe we need to start going back to this, and that is, the saying goes something like this: if you can't afford to pay cash for it, then you can't afford it. And I used to think that sounds pretty logical when I was a kid, like, well, if I don't have enough money in my pocket, I can't go buy that new video game or the candy bar or whatever, because I just don't have it. And when you're a kid, you don't have a credit card, you don't have access to any type of credit. But since the credit bubble got completely out of control over the last 50 years, everyone forgot about that advice and started borrowing to the hilt, and everything is financed today. Check out this. These guys are going all out to Halloween decorations. You don't actually see too many houses around here decorate for the holidays, but it is pretty cool when you do see a few of them that do it. So what has happened is that so many people have gone against this old school advice of if you don't have cash, then you can't afford it. So much so that everyone has borrowed for everything, guys. Even people finance their cell phones now. I mean, how crazy is that? That you have to pay a high monthly phone bill just because you can't afford the phone. I mean, that to me is the perfect example of if you can't pay cash for it, then you can't afford it. Now, I do think there are some exceptions, especially with houses. If you're looking at buying $1 million house or even $500,000 house, whatever, it's not very realistic to save up enough money to buy that house in cash. You could work your entire life and never be able to save up that amount of money. But if you can come up with a decent down payment and all the rest of your finances are in check, then you're able to buy that house because of lending and credit. And that certainly is something they had prior to 1971. But as we all know, during the last great financial crisis in 2008, the credit bubble got so far out of control that they were giving bad home loans to people who shouldn't be getting them. And I know the situation is not nearly as dire today, but some of you who watch my channel are mortgage lenders, and you have put in my comments section that people are still getting subprime loans today with zero money down and not so great credit. So even though that's not the standard anymore and it's not happening rampantly like it was back in 08, the fact that it's still happening at all is a big concern. I think what you could be seeing happening right now is a push for a reversal in this trend of, more people wanting to go back to something like the gold standard and having credit be limited, because what this will do is it'll essentially put everything in check, guys, but it has to be on a nationwide scale, if not a global scale, because this has gotten out of control everywhere, not just here. If, for example, the government expects you to live within your means now, and you can't be borrowing all this money to just buy an iPhone or to put in the pool in the backyard or whatever anymore. So now you can only finance maybe your car and your house, and that's about it. Well, then that has to be standard across the board. There can't be any double standards. It's not like the government will be able to borrow more than they bring in each year like they do right now. This is why our national debt continues to climb, and it will climb forever until they do go back to something like the gold standard or try to find a way to stop this debt bubble. But the reason why they haven't done that is because everyone has gotten rich off of this, obviously, including the politicians, and with all of this essentially fake money, guys. This is all money that never would have existed if it wasn't for the credit situation. So you can look at all these people, even people that have all these big houses and stuff here behind me, and say, oh, they're rich. Well, if it wasn't for this massive increase in this credit situation, then they wouldn't be that rich, guys. You know, they wouldn't have 10 cars in the driveway and have, you know, 3 houses, one in the Hamptons, one in Miami, and one in Malibu. You know, people wouldn't be able to do that because they wouldn't be able to leverage that far in order to obtain all of that. They would actually have to work for it, right? Not be able to use debt to get it. So I think we could be at a time in history when this could reverse. And if there is any time in history where it should reverse, it's right now. Because basically, if it doesn't reverse right now, then I think it never will. And it's going to get to the point where the debt bubble gets so far out of control and inflation is so rampant worldwide, no one will be able to afford anything no more, and then all out chaos will ensue. Because when people can't afford to feed their families, things will get ugly. So yeah, do there need to be some exceptions to this? Of course there do. You know, people still need to be able to borrow to be able to buy a house, but the lending standards should be stricter than ever, right? Like maybe a 20% down payment should be mandatory if you want to buy real estate. Forget about this, 5% down or FHA loans or any of that stuff. Maybe they should get rid of that, because all that does is put increased strain on the market. And I know this might sound bad because, well, you're saying, Michael, then people who already are struggling to buy won't be able to. Well, not really, guys, because think about the fundamentals. Think about the macroeconomic situation here, okay? If lending gets so difficult that only people with excellent credit and good debt to income and a 20% minimum down payment can buy, guess what? That just eliminated probably 75% of people looking to buy a house right now. So you can say, oh, that's not fair, Michael. Now only the rest of the 25% are going to be able to buy everything. Well, they can't either, right? Because if credit has dried up and lending is much tighter now, those people won't be able to go and buy 10 houses because they don't have the money for it either. So what will that do? Lowers prices, guys. We're going to have a lot more inventory, a lot more houses to choose from. And if the house price is lower, guess what? It just got easier for you to get that 20% down payment and finally buy your dream home. Versus the situation we have today, which is a complete nightmare. And that is, it's pretty cool. They got some 2 classic cars in the driveway here. Beautiful, beautiful condition. Versus the situation we have today, guys, where we have 7 to 8% 30-year mortgage rates and median home prices close to 400 grand. I mean, imagine if you had to put 20% down now. Do you have $80,000? Most people probably don't. Versus if the home prices dropped in half and now that same house costs $200,000 because most people can't afford to buy it no more and the lending standards are tight, what does that do? Well, now the 20% down payment is 40 grand. And I know that might still sound like a lot, but we're talking in probably more expensive areas where you have like the median home price in Florida here hovering around 400,000. That's not going to be the case for people who live in the Midwest, and you can still buy a house right now for 150 grand, you know? So that house could go down to 70 grand. Okay, now you got to put 20% down on that. How much is that? $14,000. I don't care what anybody says, that's obtainable, guys. Even if you make minimum wage, if everything came down in price, including housing, because we don't have access to credit like that, you can be guaranteed that people are going to be able to save that amount of money, even if you don't make that much. So let me know what you guys think about this idea. I personally think it's, whoa, hey buddy.
I'm so sorry.
It's okay.
Bo.
Wants to say hello.
I'm so sorry.
What's his name, Bo?
No, his name's Thor.
Oh, Thor.
Bo means come in Hebrew. So
Oh, okay.
come on.
He was a good boy.
He is. He just loves to love.
Yeah.
Come on, sweetheart. Thor, no.
Okay, Thor. It's nice to meet you, buddy.
Sorry. I'll hold him, because otherwise he'll never let you go.
Okay.
He's a lover. Come on, Thor.
See you later, buddy. Now, a lot of this might sound like a pipe dream, and it may very well never happen, guys. That is a possibility. But I can guarantee you, if I were in charge, if I were president or if I was head of the Fed, this would be policy starting immediately, because I know it's the way back to reality, okay? But a lot of people are extremely pissed off about this, and they're losing everything because You got people like Kathy Wood, we talked about her a few days ago, who are leveraged to the hilt, right? She has the investment fund that's down like 75% along with the rest of the stock market right now. And that just goes to show you where's the difference between fake wealth and real wealth. Real wealth doesn't get destroyed when a credit bubble bursts, okay? That's why, you know, I like things like gold and silver and real estate, because even though those things can take a hit in an economic downturn, they still have value even when things get bad. Now the value might be lower than it was before, lower than what you paid for it, but at least it doesn't go to zero. You know, the stock market is taking a huge beating right now. And to me, gold and real estate is a much more time-honored investment where if you hold on to it long enough, you're pretty much guaranteed to make money. You know, the stock market's only been around for like 120 years, something like that. So it doesn't have the reputation and the history that these other hard assets have that actually have value, you know? Gold and silver have industrial uses. Companies need this. Look how many companies just need silver for their electric cars. Everybody's pushing for the electric cars. We're probably gonna run out of silver, guys, just from building those electric cars. Now, I personally think the main thing we have to start paying attention to is what the Fed does, because they promised back in June that they were going to be selling off all the mortgage-backed securities, and a lot of you guys say, well, they're not doing it because there's no buyers. Maybe that's true, but what they're also supposed to be doing besides that is quantitative tightening, where they're literally destroying dollars, you know? They collect those dollars back from the US government and do not release them back into circulation. So that's the other thing that should be happening along with them selling off these securities. So we have to watch over the next few months to see if they actually continue with that, if they follow their word. Because if they don't, then you know we're gonna be stuck in this credit bubble forever, and this thing's never gonna end until it finally just comes completely crashing down. But if they're serious about getting inflation under control and getting us back to a normal society, then that's what they're gonna have to do. So I personally think it's all eyes on the Fed right now, and other world banks as well. But just go look at this website, guys. WTF happened in 1971. I'll put the link for it down in the description below because it's so fascinating. And I'll put up some screen captures here. I mean, look what happened to productivity and wages. They were neck and neck all through prior history up until 1971. What happened after that? Productivity continued to skyrocket and wages essentially fell flat. That's why we're in this mess right now. I think doing something like going back to the gold standard is appropriate under these conditions, because first of all, that was just supposed to be temporary. It was never supposed to last this long. It was supposed to be a temporary thing because the government was going broke back then due to the war in Vietnam. So they needed the extra money to kind of pay for that war. So without going into all of that, obviously the war ended a long time ago, and they should have stopped this a long time ago as well. We got one for rent. They've been trying to rent this house since March 29th of 2022. Original price was $12,000 a month. Now it's down to $8,500 and it's still vacant. But you know that when a bunch of people are getting rich, including the government and all the politicians, you know, there's not much of an incentive to stop a system that is making everybody pretty much wealthy overnight. So that's how we got into this mess. But you can just look what happened to the median home price since then. Also skyrocketed. You have other things that happen, like even families having less children. That's pretty obvious too. I mean, we have a population decline going on right now, and once a lot of the baby boomers are gone, we're gonna have significantly less people in the United States. And this all can be traced back to this 1971 move of taking the dollar off the gold standard, because all this did is it made the wealthy wealthier and the poor poorer, guys. And you can't afford to have children when you can barely afford to pay your bills. And so it's no wonder that ever since then, pretty much everything has gone downhill. Now, I saw this YouTube video yesterday from 60 Minutes, and they did this short little special on Hurricane Ian and just how well different areas fared with the hurricane versus others. And guys, I'll link this down below too, because I think everybody should go watch this if you're considering a move to Florida. But it was just so fascinating to see because what they did is they highlighted the difference between the damage that was done in Sanibel Island, which you can pretty much argue got the worst of Hurricane Ian. Sanibel Island is destroyed, guys. Every single house there is destroyed. They have no running water. They have no electricity still. Now they just have that temporary bridge that they just put up so people can essentially get on and off the island. But it's uninhabitable right now, and it will be for the foreseeable future. And then you just go like 20 miles inland to a place called Babcock Ranch. I never actually heard of this place until I saw this 60 Minutes video. But what it is, it's a newer development where they pretty much planned for everything, okay? They built homes to withstand a Category 5 hurricane. They built the community with underground utilities of water, sewer, and the power lines all underground. They put a ton of natural Florida plants and vegetation all around the area to help with sucking up all that extra moisture that comes from the hurricane when you get a ton of rain all at once. They built the community 25 feet above sea level. They have a ton of natural drainage ponds around the area to help deal with all that rainfall coming in all at once. And the reason why this was so cool to see is because this place literally got hit with a Category 4 hurricane, passed right through the area just like Sanibel, and they basically came away without a scratch. You know, they had some downed trees, and also a couple of the roofs lost some shingles. That was it, guys. No decimated houses, you know, like you see what happened in Fort Myers and Sanibel, nothing like that. Oh, and by the way, this whole area runs off of its own independent solar grid. So they have their own solar field there, and to everybody's amazement, the solar panels didn't even take an ounce of damage from this Category 4 hurricane, and nobody lost power, nobody lost water during this hurricane. So it was just incredible. You have to go see it for yourself if you haven't seen it already. But the reason I'm bringing this up is because I think this place, Babcock Ranch, could be the perfect example, the perfect blueprint of how all future housing developments should be handled in Florida going forward. Because if you don't build like this, then it's not going to be sustainable, guys. It will get wrecked again from the next major hurricane. And I know some people are going to say, whoa, Sanibel Island's right on the beach, it's right on the coast, it's a barrier island, versus Babcock Ranch is much further inland and more protected. That's true, okay? And I don't know if they're ever going to be able to build something this strong right on the coast. My guess is probably not. The first main issue is you're never going to find land that's 25 feet above sea level on any of Florida's coast. So that's like the biggest issue. They would have to artificially build an island that is 25 feet above sea level. I mean, places like Sanibel Island right now should be looking at rebuilding their entire island from the ground up and using this Babcock Ranch as the blueprint, guys. And if they do that, I think that next time they have a hurricane like this, they will fare much better, and it will be really interesting to see just how well they could withstand a future storm like this, because that place just goes to show you that we can build housing here that can withstand one of these storms, but all the infrastructure and the way the housing is built all needs to be thought of in advance and planned extremely well in order to withstand one of these monster storms. But what is that going to do? It's going to make housing in Florida more expensive, I guarantee it, because building everything to that standard is going to cost far more money than it costs right now. So, you know, a lot of people think, oh, the price is going to come down after the hurricane. If they do, it's going to be just temporary, and it's going to shoot right back up, especially if they start considering plans like this. Although if they start rebuilding, you know, this crappy housing made out of wood that can just get blown over by the big bad wolf, then it's pretty stupid. And obviously, I don't know why anybody would buy that. I personally would not. I wouldn't be buying any house that gets rebuilt to the same standard as the one that just got obliterated. I actually had more to talk about in this video, but it's already long enough, so we'll save the other things for another day. Hit the bell notification if you guys want to see all my new uploads at the moment they come out. And if you don't want to wait for that, check out my next video on the screen right over here, and I'll catch you guys in the next one.